Okay, good morning traders. Happy Thursday. Today is August 18th. Welcome to this live intraday strategy webinar. I'm Michael Boutros. Welcome here this morning. We are getting the release of some U.S. data, light data, but nonetheless, we did just get initial jobless claims coming out slightly, softer than expected, 265 coming at 262. Later in the day, the real highlight, we'll get more comments from William Dudley. That's going to be at 10 o'clock. The real major event risk for the remainder of the week is not going to be till tomorrow with the release of the Canadian CPI numbers. So we'll go over dollar CAD briefly. It did hold resistance yesterday, by the way. But let's jump right in. As always, guys, if you have any questions or trade setups you'd like to review, please feel free to post them on the message board. On my list for today, obviously the setups that we talked about in yesterday's report, Aussie dollar, Aussie yen, Aussie Cad will be in focus as we head into those Cad CPI. Kiwi dollar, Euro dollar, we'll touch on Euro Oz, which is making an interesting turn here, and the British pound. Any other pairs you want to go over, like I said, feel free to throw them on the message board. Good morning to everyone here in the room. Dan, Doug, Eileen, Horace, Jim, Joel, Kelly saying, good morning, pal. I appreciate the Kiwi dollar chart. Thanks, as usual, we are kicking ass, LOL. Cheers, Kelly, I appreciate that. Joel says, could we please look at gold? Sure. Always willing to take a look at gold. 1355 is still all you need to know for major resistance on gold Joel, but we'll take a look. Adam, Joel, again, good morning to you both. Okay, let's jump right in. Relative performance for the U.S. dollar heading into the session does have the dollar weaker against most of its major counterparts. You did see the sterling overnight with a gain of 0.83%, biggest winner on the session versus the greenback. Japanese yen down a fractional 0.16%. The yen crosses for me are still treacherous territory, guys. I'm just going to put that out there right now. I like Aussie yen on account of where Aussie is versus the dollar. And if the yen is going to start to depreciate, I think that's a pair that we might want to keep in focus for a larger scale rebound. But we'll go over that in a moment. All right. So here's what the Dow Jones FXCM dollar index looks like heading into the U.S. Open. So we talked yesterday about this key region at 11,900. We were pushing through it as we went into the U.S. trade session. We did get that stretch higher we were looking for, guys, right into the monthly open. Okay, we turned just ahead of it, and we came right back to close the session back below operative trendline support. So this is now your near-term resistance. You saw it tagged in overnight trade, 11,901. Downside support, you're still looking at a critical support region from a Fibonacci standpoint, right here at 11,849, 11,853. This is the 618 retracement of the post-Brexit advance, and this is the 618 extension of the post-Brexit high decline. Okay, so a nice region of support there. Even if you look at this from a 30-minute chart, if you guys remember, we put this together during the webinar yesterday. We're still holding that near-term channel rather well. Okay, here's channel resistance just off last week's high. Extrapolate that or take a parallel from the lows we made last week. Really nice touches, and it converges on that key region later this afternoon. Later into tomorrow, into the open of London trade tonight. So at this point, again, we'll continue to lower our bearish invalidation level now from the weekly open, where it was yesterday. We'll lower it now down to the monthly open. Again, 11,936 or so. You have the top side or channel resistance up there as well. And even if this rips higher into this region, again, this would be a nice area of which to start to look for some possible short exposure. Pretty big here. Okay, if we break sub 11,850, expect some accelerated losses on this thing. Downside targets on such a scenario, you're looking for 11,817. That's just a basic 1618 extension off the highs. And then the low day close actually comes in 11,783. We could get rid of this 100 at this point. And I would actually put a soft target right here as resistance as well. Okay, bearish invalidation still going to be at the monthly open. So even for those of us trading stateside who can't necessarily trade the index in and of itself, a great tool to help you assess base dollar moves and what the underlying pressures are on the greenback. Steven, great to see you, says, looking forward to what you saw on the Aussie dollar after the employment print last night. I watched the 5-minute chart and the 1 minute and got short when the 5-minute went below RSI 60. And price was at 77, I assume you're saying. After watching higher highs in price but lower highs in RSI, which should be good news this morning, except I set my stop above the session high at 77.23, which is where it eventually spiked into. Steven, guess what, my man? I got stopped out in the same position you did, man. Same exact move. We'll go over Aussie in just a moment. We'll do that next. Any questions on the dollar index before we move off? But Steven, I had the same exact situation happen to me last night. I'll show you the live charts in just a moment, but bear with me just a second. I don't blame you. I don't blame you, and it happens that way sometimes. And I'll show you a little trick that we can kind of practice ourselves to avoid making that mistake. Essentially what we're trying to do is call a high. Whether it is stacked up resistance or not, it's always prudent to let price turn first even. So give me 1 sec here as I open up the charts. And let's jump into yesterday's report. Here's what Aussie dollar looks like, and here's what we look like last night. So reworked some of the levels here on account of the new price action drop that we got. We did finally get a drop of the ascending median line formation. We talked about that. Remember the shorts that were on yesterday, guys, in the webinar? I closed out 3/4 of the trade on that June high day close, but this spike higher took me out right at the weekly open. Okay, that was a 35 pip gain that we locked in on that rally. So that kind of took me out of the short side. Kicking myself now because, again, we kind of turned lower, but that was the trade. The initial scalp was done. We had taken a nice 75 pip profit at the lows, and we got stopped out for 30 pips up on the way up. From here, the idea was look for a stretch rally into that 77 region, right? You have the 618 retracement of the weekly range. You had former median line support, now resistance. Just higher, you had that upper median line parallel. And this is where I might have jumped the gun a little bit because it actually did come for a perfect tag of that. You actually saw a couple of wicks above, and then this thing turned sharply lower. Here's what Aussie looks like now. Remember, the major key resistance that we've been talking about all month long has been the high day close for the year into that 88.6 retracement. Really nice pivots in price. You're talking about 77.35 into 77.56. We saw a failure of that earlier this week. Here's what the scalp looks like. Okay, and I can see your frustration, and I'm there with you. It's just the name of the game. You know, you're not always going to get it. I had a short on from right here on that spike right above median line resistance, took me out of the short. Again, and overnight, it peaked perfectly right into the open of London trade, and you had an awesome opportunity to get back on the short side, playing the same range we played yesterday. Remember, that short yesterday was from 77. So that's the beauty of the strategy. Whereas a longer term or a swing trader might be in short looking for that move back towards 74. We played that short here. The ideal scenario was you saw that recovery to play that same range. So now for that same range between 77 and 76, you got to play it twice. So here's, I guess I could just show you where I went wrong. Here's what the scalp looked like. And the idea also with these scalps, guys, is the same thing that we talk about when we're talking about swing trades and what you hear Jamie say all the time, right? If you're going to be wrong real quick and real small. If you're going to be right, kind of hang on to it. And that's what we've been trying to do. So the Kiwi short that we opened up earlier in the week offered a really nice move. We held that for over 24 hours. Now here again on the rally, we got stopped out pretty quick. Obviously, there was an opportunity to get back in again here, back in London Open, but a really quick stop, right? Really quick stop as we were heading into this key region on the spike higher. So I don't blame you, Steven. It's going to happen. What's the thing I just want to say? The one thing you want to keep in mind, or the one thing that you want to sort of use to your advantage, is don't give up on the trade necessarily as soon as you get stopped out. If I was up for London trade or London Open, you know, you had some divergence in momentum as price action pushed a newer high. You even had a decent momentum trigger here on the 5-minute that could have put you back into the position. Okay, and that would have been a stop against the opening range high for London, or for Asia rather. So, or the Asia highs in general. So it would have been actually been a decent entry. From here, what's done is done, right? Right, Stephen? From here, what are we looking at? Well, I would be looking right back at 77. Right back at 77. That's still the upper median line parallel, still that 618, which offered some support after we broke through it last night. And a rally or a rip spike higher into here into U.S. trade, in my opinion, would be a nice opportunity to try to get back down to those south side targets. Remember, near term, you're still looking lower below this confluence region. Just a basic break of a multi-week median line formation. Break of support, check it as resistance, move off. Okay, it kind of coincides pretty decent with dollar index maybe seeing one more low towards that Fibonacci confluence region we talked about, and then the move lower would give us a little bit of a bounce in the dollar index. Guys, does that make sense? Steven, does that help? Graham says, Aussie dollar, the trick is to live on the right side of the Atlantic and use 5-minute charts for divergence. Cheers, Graham. Thanks for talking about what didn't work with Steve. Really helps too. Cheers, Eileen. I am not so much concerned right now with getting stopped out. More wanted to see what you saw on the 5 and 1 minute. So, Stephen, did that help? Did that review help there? To be quite honest with you, that rally there was no necessarily trigger in momentum. But for me, it was just a really nice opportunity because I had a stop very clearly identified above those highs from US. And then we also had structural resistance, right? So again, your risk to reward, we took a 75 pip gain on it just a day before. I'm not gonna cry over spilt milk with a little 25 pip loss there. Stephen says to make sure that I'm learning how to use them. So I hope that's helping, Steve. And again, let me know if you have any other question or if you have any other specifics, like examples you want me to look at. Can you just look at the 5 minute and 1 minute around 2200 Eastern? Sure. Last night, right? Here's 2200 Eastern. And 2200 Eastern here. Oh man, so you were playing it super tight, huh? Okay. It's going to keep shifting over every time we get a new candle, but this is what I would say. I can see how you got stopped. You had actually a better entry than I did. Give yourself a little bit of a cushion, Steve. I know, typically we want to play this pretty close to the chest because we're higher leverage and we're working with a really smaller time frame. But if you had gotten in and you had to stop, maybe 2 or 3 pips away, you got to at least leave room for like the spread. Do you know what I mean? So I think that's the only questionable issue here, Steven, on that trade. I think your entry was right on point. I just think that if you got stopped out in that spike, you may be playing it a little bit too close to the chest. Now, you guys hear me say all the time, risk management is paramount, right? More so importantly sometimes than how much you make is how much you're willing to take as a loss. But if we play that way too tight, you can find yourself in a scenario like this, Steven. And I've been there. I've gotten to ruts for weeks where I just keep getting stopped out of near-term positions that inevitably go my way just because I'm playing those stops a little bit too close to the chest. So, Stephen, if anything, I would say lower your leverage a little bit. If putting the stop a little bit further out is uncomfortable for you, I would lower your leverage a little bit on the position. Give yourself that cushion, and I think you'll be a lot better off. But I have no problem with that position you took. If you had just given yourself a little bit more of a pillow here, I think you would have held that just fine. But as far as the momentum triggers that are concerned, you did have a couple here. A, divergence in momentum, price action making a higher high, the oscillator making a lower high. You also had a near-term trigger, which didn't pan out till later, but that was there. Even a short right there at 77 with a stop against 77.18 gives you a 20 pip stop. Again, leaving yourself a little bit of a cushion. So if the high is 18, you'll put it at 25. Typically, I put it like 5 pips out against the session highs. My stop was actually against the London high from the previous day. right here. So I got stopped out right ahead of that peak. And again, that's just playing it a little bit too close for me as well. So we're both on the wrong side for that. He said, I've done that too. Too small of stops sometimes. Exactly, says Eileen. Steven says, no worries on the stop. What are you seeing on the price versus RSI? So that's what I would say for the price versus RSI. You had a really nice indications of a turnover, divergence into a trigger break, momentum breaking 60. All of these are indications I would be starting to look for exhaustion. On the 5-minute chart, you also had the same similarities starting to manifest. Here's price action making a higher high. Remember, this only matters on a closed basis. Okay, so bring it into a line chart, higher high in price, lower high in the oscillator, trigger break, you're looking lower against that high. Does that make sense, Steven? Does that kind of give you what you're looking for there as far as price and RSI? He says, great, thank you. Yeah, you're more than welcome, Steven. So dust yourself off, no problems. You're going to get plenty of more opportunities on this one, I think, and so will I. So we'll be looking for the possibility for a nice little rebound here to get us better entry. If you don't get the rebound and it just straight up collapses, don't go chasing it. Let it go. We'll sit on our hands looking for near-term support targets right back at that swing low that we made for the open of the week. The soft target at 76.37. And then a little bit more important is that June high close. Not so much just because the high close, but just because it is also the low we made yesterday, and it converges on that median line heading into tonight. Any questions on the Aussie? My concern, or I was more concerned that I was seeing the momentum change correctly. Thank you. Yeah, Steven, you were right on point, man. Don't have anything to adjust on that. I think you're on point. Just a little bit too close on the stop. Okay, and that's Aussie. We have a lot to go through today, so if there are no other questions on Aussie, we'll move right through. Next up on tap was just an update on Aussie Yen. I presented this sort of basic layout for or on Daily FX yesterday, heading into the employment report. By the way, I do want to just take a moment and go through that employment report with you. One of the reasons that I felt comfortable fading the move as well was because of the initial reaction on the data. So everyone came out and saw 26,000. Oh my God, 26,000, that is awesome. We were only expecting 10, upward revision to the previous month. That looks ridiculously good, right? Well, guess what? Deeper look in the metrics, doesn't look all that good. Full-time employment contracted by 45,000 last month. And you saw part-time employment gain 71,000 last month. So not necessarily a good dynamic for labor markets to have part-time employment growth outpace that of full-time employment. Also, that is largely why you saw the unemployment headline figure downtick to 5.7. So as the market ripped higher and everyone was focused on the 5.7, everyone was focused on the 26.2, I had tweeted this right after it came out, and I even noted that the dynamics and the deeper metrics doesn't look all that good. So now you're at risk for a market fade. And that's why as soon as we came into that initial resistance, I was looking to fade this move just on account of, this overreaction on the data. That being said, just keep that in mind as far as the employment data is concerned, because you're going to see a lot of different various headlines, some that are just highlighting that 26,000, 5.7 blowout read, others that are going to be a little bit more moderate and give you the breakdown in that this is not all that strong of an employment print. Okay, so looking at Aussie Yen was another one yesterday where it was coming in some near-term support. You're coming into the monthly opening range low. You're coming into the low day close for the year. That's just lower from where we were yesterday. And I was looking for a little bit of a rebound here to get us the opportunity to get back on the short side for Aussie Yen as well. Not my favorite Aussie move just because it's the yen, But with the breakdown that we were watching last night, if this thing rallied, I was looking for a possibility for entry here on the short side for a move lower. And that was the premise of the idea. We're holding a near-term descending channel formation off last week's late high. And the game plan was to look for that rally to sell. Well, worked out pretty well. Again, the turn didn't happen until early this morning, so I missed this one. This is an hourly chart. And here's where we were yesterday. So we did get that rally. It actually held, again, this is the monthly opening range lows, just lower at 76.20. That's the low day close for the year. And here's the rally right into that near-term channel resistance, looking for short triggers while in this region. Okay, momentum holding 60. These are all good things. So not sure it's poised for a move just yet. With Aussie dollar, remember, getting a little bit more room, looking for a little bit of a rebound here to get back on the short side. I'd like to have a stop, if possible, against that swing high that we made in Asia last night. I don't know if you get that stretch, but this is broadly the formation that we've been holding. If you guys remember, we highlighted this setup 2.5 weeks ago when we were right around here, just after the highs. It's still held the same formation. Still the same formation, no changes. So it's a very similar game plan, that's all to say, as Aussie dollar, okay? Except this is testing near-term resistance right now. I wouldn't put it past this thing, just going off of weekly resistance, to see a tag of this region. Again, this is the weekly open, and that would be the ideal entry because you're working against that Asia high that we made yesterday. So see if we can't get that stretch for a move lower. Again, you're targeting the low day close, 76.20, 75.90 would be a 618 retracement of the entire rally. And then 1618 off the highs takes you to 75.60 down here. Any questions on Aussie Yen before we move off here? Okay. Next up on tap from last night's report was Ozzy Cad. Another setup that we had highlighted earlier in the week, if you guys remember. I think I just showed you the 240-minute chart earlier this week when we were just opening up the week, and we said, look, you're coming above major key support. You have the monthly open, trendline support off the 610 low, and the median line of this formation. Now, we had no way of knowing whether this pitchfork was actually in play. You did get some decent pivots along the median line here, but we needed to see some conviction. I'm starting to think more so now that we're on the right track with this pitchfork. If you look at the 50 lines and the reaction you've gotten against the 50 line, support, break, instant resistance. Okay, that puts the next 50 line down here. You can see that that caught the low. And that puts a target somewhere around 97.70 if we see a downside break from here. Here's what the scalp looked like last night. And here's what Aussie Cad looks like now. So let me start off by just showing you the daily chart real quick. So again, just working off of the major key levels that we were looking at yesterday, still support at 98.16, resistance right at the monthly open, at the median line. You saw that tested perfectly last night. Was a beautiful opportunity to get back on the short side for Aussie Cad here, and here we are moving our way down. Still looking at major key support near term at 98.16. Remember, this is still the objective monthly opening range low. Here's your monthly opening range low right here. Comes in at like 98.23, just ahead of that. So look for this support break. It should be pretty big. If we do see a downside break, your initial targets, again, 97.70, not only is it that near-term chart, which I'll show you in a moment, but you got the 50 line and the 200-day moving average right there. Subsequent downside targets, 97.23. That should be a bit bigger if we do see that. if you do see that break. Here's what it looks like on the hourly. Okay. And here's what it looked like last night again on the scalp. So still holding that nice decent channel resistance. We were looking for a move into 98.81. Monthly open comes in just higher at 98.90. Well, we came right into that. And you saw that hold. Triggers, we can look at a 5-minute chart. I really wasn't up for this, but I'm sure it looks like you would have had a trigger to the downside against the session high. And here we are moving right back into support, a move lower. Again, 97.70. This region here, basically you're looking at the 50 line, right? And then this region here into 97.20. Areas of interest here for a little bit more of a exhaustion low. If we do come into this 50 line, I would be looking for a possible rebound near term to take you back up a little bit before continuing lower, just on account of the fact that the 50 lines on both sides of the market have been giving you pretty decent inflections over the last couple of weeks. So just keep that in mind for the downside here on Aussie Cad. A decent player, a decent, candidate heading into tomorrow's consumer price index from Canada. Here's what those numbers are supposed to look like. So tomorrow we're looking for retail sales data as well, I might add. 0.5%. We are looking for a decent rebound month on month. If you strip out auto, looking for a slide to 0.3. More importantly, those CPI numbers for the month of July, looking to come in flat month on month. Year on year, expected to downtick to 1.5 from 1.4. All right, so if you do see this start to prompt some CAD weakness, it might give this thing an opportunity to give us a rally again, especially if we're here to get back on the short side. One thing I do want to note is the most important read is going to be the core, which is expected to come in at 0.0%. More importantly, core year on year. That's your headline figure that you want to focus on. Expect to hold at 2.1%. So the world is fighting a deflationary spiral, and inflation is the name of the game. It's still the name of the game for all these central banks who are trying to stoke inflation, and if inflation continues to be the laggard, you could expect further easing, further lax monetary policy from all these central banks. So now that we've sort of talked about the CAD, I do want to shift real quick before I go to Kiwi and just show you dollar CAD and what that's doing. I'm very mindful. Now, let me just take one step back, guys. We talked about this Aussie Cad setup. I do like if we break lower for a search to or look for a drop into that 50 line. One thing I do want to note is that some of these trades, especially for the CAD, may be upcoming to near-term exhaustion. Here's what dollar CAD looks like on the near term. And this is why I think you might get a little bit of a rebound here. Some CAD weakness might limit dollar CAD strength or Aussie CAD strength in the near term. CAD strength might limit the Aussie CAD sort of rebound that we would need to get back on the short side. But here's what I want to say for the daily chart. We talked about this yesterday for dollar CAD, the fact that we had closed the session below that multi-month median line formation, and that we should be looking for resistance right back at that same line. You got that yesterday and closed lower on the session. Strong tell. In fact, on the 30-minute chart, this might look very familiar. Look where we peaked. Right into former trendline support, now resistance. That's as bearish as it gets, guys. As far as near term, or let me take a step back. As far as validating a break of support or resistance, that's something you want to see. Now, what's concerning me a little bit is, guess what? On that low, now you're marking some divergence. So what the heck is going on, Mike? Do we want to stay bearish? This thing broke support and tested it as resistance, but at the same time, near term, you're setting some of that divergence. So what I can say is this. I think this is going to be sort of a fake out trade. One of the reasons I didn't highlight it last night, even though we did get that strong inflection, is because, to be quite honest with you guys, I don't know. I really don't have a very strong opinion here on dollar CAD. I want to see a washout, either another test of this high and everyone starts loading up and then it just slams the hell out of everyone, or just a drop off, into some sort of structural support where you can start to look for at least some sort of near-term recovery. At this point, Let me just add that 764 for you. But at this point, you're working on, this would be the 9th day of consecutive losses. Let's check out how many times we've seen that actually in history. Okay, the last time we saw that was right here. And previous to that was this, which prompted a little bit of a rebound. But let's go back and just check out this last time. Okay, it was right about mid-trend, right? Here was the breakdown. After a 9-day or 8-day decline, you saw a single-day recovery before a slow and arduous climb lower. Before that, prior to that, this was a 9-day decline, or a 10-day decline, excuse me, and that one posted a little bit stronger of recovery, which lasted a little over a week and a half before we went to new lows. That's all to say, guys, that we're coming into an area of which sentiment exhaustion starts to become a real concern. In fact, if we take a quick look at what SSI's standings are showing for dollar CAD, you can see that traders are starting to load up on the long side. Okay, now typically that's bearish, right? We talked about some of the ways that we use SSI here yesterday, but just a quick recap. Typically that's bearish, but when sentiment reaches an extreme, as price is reaching an extreme, meaning a new high, a new low, things of this nature, that's when you want to start working and actually looking and taking the side of SSI instead of fading that directional bias. So what I wanted to point out is last time we saw a read of +2 or more was right ahead of the lows that we made for the year. Prior to that, we saw a read of, looks like it was about 1.75. You saw that called the peak for earlier, or the low for earlier this year. And here we are again with SSI climbing on the long side. On building long exposure. So long exposure actually is about 46% above its weekly average. So that's all to say is that I'm looking for near-term exhaustion possibly to the downside on dollar CAD coming up, okay? Which is why I'm not too super excited about taking long CAD positions right now. So I just wanted to bring this to your attention ahead of the release, obviously, of those numbers tomorrow from Canada. Let me just clean this up a little bit. Okay, the 88.6 comes in right at the 2016 low day close anyway. And you basically want to stay bearish against today's highs. Any way you slice it. Any way you slice it. Break lower, you're looking for that drop into the 2016 low day close. Any questions on dollar CAD? Okay, so we went over Aussie, Aussie Yen, Aussie Cad, dollar CAD, Kiwi dollar. Good old Kiwi. Well, another missed opportunity to trade against that 73 handle. Nothing's changed. Not a damn thing has changed on this thing since we highlighted this major key resistance earlier in the month. That resistance level is 72.92 into 72.96. That is the 2016 high day close, the March 2015 low day close, and that's basically the region we've been trying to clear all month long. Okay? In fact, for the last 2 months. Here's dollar CAD on the daily chart. You tagged it once in June. You tagged it 4 times on 4 separate occasions and failures to break through here in July. And here's this month. This was also the 4th attempt this month to try to get through that region. Momentum really struggling to show any upside potential here. So I do still think you're at risk. I don't necessarily, well, let me take a step back. I was looking for short triggers against that. Again, same issue I had yesterday is that I did not want to load up If you guys recall, we talked about this in the webinar. The Kiwi short worked beautifully yesterday. I missed this because I was holding the Aussie short. Very rarely am I going to want to get short Aussie dollar, short Kiwi dollar, or put all my eggs in one basket by getting excessively long dollar or excessively short Aussie on multiple crosses, right? Because if your bias is wrong on that single currency, well, now you're out on two trades. So I typically won't load up all in the same direction unless there's a real conviction position there. That being said, you had a great opportunity here. After that rally on the data, just like Aussie did, faked everyone out, came back. Steve, this would have been a better option for us because guess what? This thing never spiked through and made a new high after the Aussie data, right? It pushed into that high, and on a trade like this, if you had your stop right against the high, you would have been all right. Hindsight's always 20/20. Long story short, guys, this is still the risk. While sub 73, Kiwi's at risk. Now, I'm not going to lie to you. Construction, momentum looks pretty constructive still. Okay, yeah, we peaked below 40 here briefly, but it doesn't look excessively bearish to me just yet. I would be looking to sell rallies sub 73, and really that's what I'm going to continue to use as my bearish invalidation. If 73 gives out to the upside, you have the high, July high at 73.25, but you're essentially risking a much stronger rally towards 73.80. 73.80, by the way, big region. This is a 764 retracement from the decline off the highs he made in, what is that, April 2015, but also just a basic near-term 100% extension from that low we made last month. Basic trendline resistance off the June high meets both of those into that region later this week. I did get into Kiwi short when it went back into 73 at 2:30 this morning. Steven, my man, good stuff. Yeah, I mean, for me, it's all about it's make or break. As I said in the update on Wednesday night or Tuesday night, was it? As we were approaching this for the first time, this is a make or break level. I mean, honestly, if it breaks higher specifically on a close basis, I do expect some accelerated gains. But as long as you hold that level, again, it's been such a pivot in price since last year. There's the low day close before we inevitably broke it later in the year, but pretty big, right? Major key support, by the way, is still the monthly open because it converges dead on with a basic trendline resistance, support rather, off the lows here. It's basically like 72. So you got real clean, clear-cut levels here near term on what we need to clear in Kiwi dollar to get a little bit more conviction on a near-term bias. In fact, if I take a sliding parallel, does that meet up? Woo! Look at that. That is beautiful. That's just the same slope. Same slope. Same slope. Steven says, all thanks to SB webinars and teaching me what to look for. Thank you. Cheers, Steven. You're the one pulling the trigger, man. It's not my levels. It's the market's levels. I'm just helping you find them. Okay, and that is Kiwi dollar. I do want to take a moment and talk about Euro Aussie, and the pound. I'm not currently, as a disclaimer, into any of these trades right now, but I do like them. I feel for Jamie. That swing trade missed entry literally by the spread yesterday. And the pound, very similar scenario as well. So we're both bulls on both of these positions. I still think that you're coming into some near-term resistance, so you want to be a little bit cautious if you're looking for a longer-term play. For me, this is what I'm looking at, and this is what we've been following together here in the webinars for the Euro. We talked about this. Former long-standing, multi-year, formation, that slope broke on Brexit, checked it as resistance, moved lower. This is the current operative slope we've been working with off the lows. Look what's up here. You have the median line and former trendline support. So a 786 retracement of the Brexit range alone, that singular day range, also puts 113.18 into focus. Long story short, you want to stay constructive near term now while above this region. Bullish invalidation is at the monthly open. A breach higher, you still got to get through that median line, but I'm looking for this. Okay, I'm looking for that 113.96 level. I don't know why that circle's so big. There we go. So it might be a scenario, guys, where like you get a little bit of a pullback towards, again, former trend line or median line resistance. You might offer a little bounce there to break through. Today's close is paramount. If we close sub 113.18, I would be concerned for a little bit of a correction downturn or a near-term downturn. But as long as you stay above 112.20, 112.25 in your term, I want to stay constructive. Remember, the 100-day moving average still sneaks right in there along the 618 retracement and the 100% extension. So the same region, which was the objective monthly opening range high, is now key support. Here's what it looks like on the 30-minute chart. Okay, so even within the confines of the near-term advance, with these slope lines that we've been following, still pretty clean, still pretty darn clean. And even with that, it also highlights, again, that same key region right now, 112.23, 112.30, key support. Former monthly opening range. Here's the August 1st open. Here's your August 2nd high. August low, break of the opening range high, keeps the focus higher above 112.30. Now, that's all good and dandy, Mike. What do we do from here? What are we looking at heading into the U.S. session? Well, you're at risk for a pullback on building divergence. Remember, I always tell you guys this, divergence signals above 70 tend to be pretty weak. Those are your weakest. But when one divergent signal is above 70 and the other one's below 70, those are strong signals. When one of the reference points are sub 30 and the other one is above 30, those tend to be strong bullish signals. So near term, heading to the U.S. Open, yeah, I think you risk a little bit of a pullback here. I'd look for support right around this region. Again, bullish invalidation level, 1230, 1225. And obviously we went over the top side targets pretty clear. So look for a pullback to get long in euro. Still like it. I do think you're a little bit tired here as momentum suggests. And, the stretch higher, you're basically looking for 114. But just be mindful of that near-term slope here. Any questions on the euro? It's been a tricky trade. And as I said, I personally haven't taken anything myself on this yet over the last 24 hours. But if you guys recall, early in the week, I actually got stopped out on a short right here at the open of Sunday trade as soon as we ripped through the monthly open. So again, I took a 15 or 13 pip stop there. It wasn't much, but now that we've continued to break through, we're following these guidelines rather well. Look for the pullback here to give you another opportunity. From a scalping standpoint, would I be interested in a short exposure? It's a good question I just asked myself. Let me see if I can answer it. 1 minute. Oh, you might get an opportunity. Here's the deal. Here's your U.S. opening range high for the U.S. futures market open, 113.30. Momentum looks pretty decent on the 5-minute chart. That is getting tired. As we said, we were marking some divergence, but even on this now, if we get a rally where I can put a stop against the London high, might be a decent near-term pullback. Remember, I'm being very near-term here in that for those of you who trade like I do, super nimble, remember, when we're trading counter trend, which is obviously what we're doing, we're at half leverage. You're not going to load up into a counter trend trade with your typical allotted size. Once we get the pullback, for those of you who would rather play a little bit more of the trend is your friend and stick with the broader directional bias, I would wait for a pullback to get back on the long side. But there might be an opportunity for us here near term. The other trade was Euro Oz. This is just an interesting setup in and of itself as well from where we're trading at. I know we talked about this here briefly in the webinars yesterday. I can't remember who asked, but remember that resistance region we talked about? Yeah, it prompted a massive pullback. So we were looking at this yesterday in the webinar. Someone was asking about it. We highlighted this interesting region, which was 47.97. Okay, really nice pivot in price here and the lows that you made back on June 24th, Brexit low. And basic slope resistance. This slope is derived from basic trendline support. Take a parallel, acted as real nice resistance. Pivot, pivot, take a parallel. We were looking at this region yesterday into the webinar. Okay, that held really nicely. And in fact, you had a nice opportunity here with a short trigger early in the session. Took you down to the first target, broke that later last night. I would have been looking for a move into this region, so I probably would have gotten stopped out at a 30 pip profit on this move if I had taken it, but I would have been looking for a move into a basic 38.2. Now, that being said, the rally coming back up, failing here, okay, suggests that you still possibly have another pullback before you move higher. And that sort of bodes well with what we're looking at Aussie dollar, right? Let's see an Aussie dollar move higher, Euro Oz move lower to give us a little bit of that pitch, opportunity to get short Aussie, opportunity to get long Euro Aussie. Questions on Euro Oz? I know we just touched base on it yesterday, but I wanted just to give you an update. I was looking at it last night and looks pretty interesting. Okay, let me go into the British pound real quick, and then we'll touch a base on gold for you. Who was that for? Question on gold earlier. I think it was for you, Joel, right? Okay. So first things first, British pound. Here's what sterling looks like. I got you, Joel. Pound dollar, pound dollar, pound dollar. Where is it? There we go. All right. So just going to bring you to the previous intraday update where we covered pound dollar. I believe it was the 16th. Yep. Okay. Here's what that chart looked like, or what it looks like. I got to fix that. What we looked like earlier in the week. Okay. That formation, this is pound Kiwi. Oh, here it is. Sorry about that. That formation continued to hold until we broke 31, which was really the marker for me last night. If you guys recall, even earlier in the week, we were looking at this thing last week, coming into this major key support zone, saying if we hit into 28.50, if we get into 29, might be an area of possible exhaustion, areas of possible long interest. Well, we ended the week just below that clear pivot, went to 28.70, didn't quite make it to 28.50 before finding support. And again, we broke that range earlier in the week, shifting our focus higher. This is what it looked like back on the 16th. Still looking to buy pullbacks, targeting 30.56, and more importantly, that 31 handle. And a break there is what should offer some accelerated gains, is what we noted. That's exactly what happened. You saw a quick mutter higher here yesterday on that reversal and pop. Was very hard to get in, so I don't blame you if you missed that one. Again, an overnight trade for London Open. You saw a really nice break of the basic London opening range. 31 got taken out literally by a pip. Just missed that 50% retracement, but you're looking at near-term resistance now at 31.73. Okay, near-term support, right back, former resistance, 30.56. A break higher, you're looking at a key region, absolutely critical, 32.46 into 32.24. That's basically the monthly open and a key 618 retracement of the broader decline off the highs you made in July. So finally some super clear price action here, at least in my opinion here for the sterling. This does constitute, in my again, my humble opinion, a break of this near-term formation that we've been holding for good on 5 weeks now. You can see that while we haven't seen too much inflection off the median lines on the outer sides, the 50 lines or the parallels have been offering some very sweet touches, okay, and really keeps the focus higher near term while above 30.56. On the long side, if you are holding longs or if you are looking to get into the long side, I wouldn't personally be targeting anything above this from a scalping standpoint near term. This is pretty big. I would expect to see some more whipsaw, some more dramatic pullback off that region, but this is the big make or break level for sterling near term. Any questions on cable? Finally making the move here and bucking the trend. Also do note, one thing to take note of, as we noted earlier on the swing updates in the week with the readings that we've been getting, extreme sentiment as far as momentum is concerned, keep in mind, just on a basic daily RSI, it's some pretty compelling divergence. You might get faked out because you're looking at the wicks, but remember, that don't mean anything. It's all about the closes. Price action closes lower. The oscillator, obviously, one reference point above 30, one below. Pretty strong divergence. All right. Okay, and for you, Joel, let's take a quick look at gold. So here's what gold's doing, man. It's been, or Joel, before he says, I wanted to know what you think is going on with price in gold. Seems to work well with Elliott waves if this is wave 4. So let me bring up the gold chart. Joel, before we get started, I just want to tell you I'm not really huge on Elliott. So I'm not going to, I'm not one of those guys who's going to sit here and try to label every wave and this is the interior structure of this wave count. For me, it's all about simplicity. If I can easily, readily identify a 5-wave pattern or a 3-wave correction pattern or a flat or a zigzag, great. Adds conviction to my bias. But do I try to base my bias off of Elliott? By no means, Joel. By no means. So I'm not really going to get into the individual wave counts. For me, I still think you're working with a triangle type of correction, which could inevitably break to the upside. Your key region of resistance, which we highlighted for the last 2 weeks, still remains the 2016 high day close at 13.55. And you can see how many times we've tried to attempt to break that. It just so happens that as we get into the latter part of this week, a basic median line resistance, which we highlighted last week, converges on that key region and further highlights that 13.55 break. If we clear it, sayonara. You're probably going to see a continuation higher targeting 13.80 right up here. And let me just say one thing, Joel. Longer standing, longer term, I am bullish gold. Okay? It's just that ever since last month, on that massive reversal day after we failed to close and push through that 2011 trendline resistance off the record highs, ever since then, every time we run into that sort of slope, you start to see some momentum waning, bigger inability or spikes to be able to get through that. You can see that on the 5th here, we had a massive outside day that slammed us lower. So for me, below 13.55, you're still at risk for the correction. That's really the breakout zone, specifically on a closed basis. I think that would get this thing going. I don't really track this near term as far as scalping is concerned, Joel, but let me know if you have any specific questions beyond that. Here's what the 2-hour looks like. And again, this is why I say near term, this is the 2011 trendline resistance. So I'm just going to delete it because it's going right through price action right now, but just to show you kind of what I'm looking at here. All right, and you can even use the lower slope here as triangle support, but you can see the consolidation that we're seeing right under the high day close at 1355. Here's your weekly open. Haven't updated this in a couple weeks, so bear with me. So here's your weekly open. So one thing I would say, guys, to everyone here in the room is on its face, all this thing has done is open up a very clean and readily identifiable weekly opening range. That's it. Here's your weekly open, which happens to be support. Here's your weekly opening range high, which we tagged and failed to even stretch into resistance. That's really the range you need to beat. In fact, I wouldn't even use that. I would use 1355 right here. That's the key level. That's your range. Outside of that, you know, I think you get some more chop sideways, Joel, before you finally get the breakout. All right. And also think of one thing. If this thing still is in correction, some of the dollar weakness that we've been seeing as of late may limit the downside. So although you might be expecting this thing possibly to pull back some more, the weakness that you've seen in the greenback has sort of limited that, because obviously the gold priced in dollars, as the dollar starts to depreciate, puts inherent upside pressure on gold typically. So I think you got to be careful. I think you got to be careful sub 1355. If you get the dip towards 1330, I think that's an opportunity possibly to look for a long side trade. If the triangle breaks lower, 1287 is where I think you would get the most ideal entry. Get the 100-day moving average, 50% retracement, lower parallel, median line support. I mean, you name it, it's down there. So first things first, watch that near-term range. Joel, does that help? He says, awesome, thanks. Right, that's what I was looking for. Right on, Joel. Cheers, mate. Okay, and that is gold. So guys, that's pretty much everything I had for you today. If you have any last minute questions, feel free to post it on the message board. Otherwise, I want to just prompt you all tomorrow for the CPI release from Canada. We also get, again, remember today at 10 o'clock, Fed official, Dudley will be on the horn, so you could get some more, knee-jerk reaction to his comments. But largely speaking, we're standing pat on most of our biases. Horace wants to take a quick look on dollar yen. Horace, I'm not trading dollar yen. The only yen pair I'm interested in even looking at is Aussie yen and possibly pound yen. Joel, I got nothing here. Even if I try to, work some near-term levels, it'd be, I just don't have any conviction. So the levels that we marked yesterday are sort of the same levels I'm looking at. Even that swing low at 99.98, you're getting some messy stuff there. It did mark some divergence, so I was looking for this morning heading into the U.S. Open for a rebound towards the weekly open, possibly 101. But man, this thing, it's flirting with a disaster. I don't know. Sub 101.30, this thing could just plummet into hell. So I really don't want to encourage you guys. I mean, if you feel compelled to trade it, I don't want to stop you, but it's not something I would bring to your attention as a possible opportunity. Not yet. Not now. All right. Pound yen. I went over Aussie yen, but pound yen is something that I was looking at as possibly a nice resistance break here. Okay, so we've been holding this descending channel formation. Sorry about that. For 4 weeks, 5 weeks now. Really clean. Super clean. Here's channel resistance. Well, add to that, just higher, 236. So the basic premise is your 3240 level is the breakout zone. If you guys remember, we actually looked at this earlier in the week. I'm not sure when the last report was on it. Let's take a look. I don't think I highlighted it in one of the updates as of late, but basically the premise is you're at near-term resistance. This is your breakout zone. On a break, you wouldn't want to play the break. You want to look for the pullback to get back on the long. And that's the thing I wanted to highlight. Horace, you're more than welcome. That thing I wanted to highlight, Steve, earlier today when we were looking at the 5-minute chart. The better opportunity for us on that was to look for the turn first. Instead of trying to sell the spike high, look for the turn first. So as price action came over and turned, look for a pullback and a defense of that resistance to offer the conviction. And that defense of the resistance didn't actually happen to the spike where both me and you got spiked out. Or actually, I got spiked out earlier, where you got spiked out. So the defense and failure, now you're getting a much clear cut, okay, now there's divergence, there's the trigger break, and this should have been the operative trigger, as opposed to me getting a little excited here on the break below 70. All right. So long story short, in sterling yen, look for a pullback here. I would be looking to stay constructive near term while above that 50 line that currently comes in somewhere around 1375, 1380. You'd need to break 130.75, 130.80. You'd need to break above 132.40 to really get this thing going. This is a 2-hour chart, so here's what the 1 hour looks like. And one other thing I'd add, something like this. 100% comes in right there on the 38.2, or that's the 1618. Oof. And 618, don't need that. Okay. Yeah, you know what? Let's move that 236. Less significant of a retracement and more appropriate in time is that 100%. There you go. All right, hope that helps. If you have to trade a yen pair, someone put a gun to my head, this would probably be the one alongside Aussie Yen that I would look at. Oh, goodness, I'm over on time. Okay, guys, that wraps up the webinar schedule for this week. I want to thank everyone who attended. We'll be back on board. Remember, Monday morning, we do get a free webinar on daily FX. Tuesday and Thursday of next week, we'll be back here on SB Trade Desk. I will have Wednesday off. I have an appointment that I won't be able to make the webinar with, but we'll be back on here on SB Trade Desk back on Tuesday. Till then, best of luck trading. Watch those CPI numbers tomorrow from Canada, and I will see you all next week. Cheers.